prove success early on, your access to capital for growth going forward is almost endless.
He put in his notice, he quit his job, and then like a week later, we found out we are expecting a baby on the way. Here we are, right?
But remember, at the core of what your business is, it's about providing care. So can the business survive without you there on a day-to-day basis? And not necessarily run just as well without you, but it can be successful without you.
Welcome to ABA Business Leaders, brought to you by 3 Pi Squared, where we discuss topics on how to create and grow an ethical and sustainable ABA practice.
Whether you're starting, scaling, or thinking about selling your business, we're here to share insights, stories, and strategies to help you on the journey.
We owned a successful ABA practice for over 10 years.
And now we help other ABA business owners do the same, without all the chaos.
Stick around, you're in the right place.
Hello, everyone. Welcome back to ABA Business Leaders Podcast, brought to you by 3 Pi Squared. I'm April.
I'm Steven.
And here we are. We are back. We are continuing our Back to Basics 2025 edition series. And this is where we go back to the foundations of running an ABA business, whether you're dreaming about starting a company, already running one, or preparing for what's next. We'll meet you where you are. And as we've been talking about for the last, we've had quite a few of these back to basics now. I'm really excited about them. But the earlier that you do start working on these foundations, the better your chances for success, the fewer problems you'll face, and the smoother your growth will be. Just like in our clinical practices, early intervention does make all the difference. And as you know, if you've been following along to this series, we focus on one core business topic and talk about what it means when you're starting, growing, or wrecking the place, transitioning out. And so no matter where you are in your journey, you walk away with clarity and next steps. So today we have with us a special guest. We have with us Shep Harris. He is a senior loan officer who originates new loans in the senior care and behavioral health care sectors. Before joining Live Oak Bank in 2015, Shep worked for 5 years at Branch Bank and Trust, where he spent time in small business financial analysis and lending. His duties included the initial underwriting of new loan proposals, structuring deals, reviewing corporate tax returns, and other responsibilities. He received a BS from the University of North Carolina at Wilmington in finance. So as you guys guessed it, today's topic is finances. Yay. So welcome, Shep. We're so glad to have you.
Thanks for having me. Glad to be here.
Yeah. So there's so much to unpack here when we're talking about finances within our ABA business. I mean, finance for any business owner is a big game, right? There's a lot, to take into consideration. But I do feel like in our field, I always feel like our field is a special consideration because that's the field I'm in. But specifically for ABA, the way our funding works is quite challenging.
Yeah.
And so when we met you guys at Live Oak Bank and we started talking to you and learning more about what you did, we were super excited, not only that you do cater to ABA companies, but as in our conversations with you, like how much you understand our space. So I don't know, would you like to start a little bit about talking maybe about what got you guys into ABA and like the journey with starting with helping ABA owners?
Yeah, absolutely. I appreciate that. So I would say one of the biggest differentiators in Live Oak Bank is our theory of verticality. And so what I mean by that is typically a bank in your community, you have a banker and they lend money to the shoe store, the grocery store, the car wash, anything and everything within a 20, 30-mile radius, right? They know a little bit about a lot of industries. Our business model at Live Oak is the complete opposite. We build a team around a sector, and then that person or people goes to all 50 states. So if you're going to live and breathe this space on a day-to-day basis, The intent is that the people that you're partnering with from a finance perspective understand the ins and outs, truly understand the ins and outs of how your business operates. And particularly what's unique in this space is public payers and commercial payers, right? It's not, services rendered and you get paid the next day. That's just not how this works. It's not someone buys something and they'll pay for it. It doesn't matter if, they take a little penny. If they're missing a penny, need to get one to round them to the total. That's just not how it works. You have to have every T crossed and every I dotted. So you mentioned uniqueness, and that's what, in our eyes, that's how we've built a business. So we lend to about 40 industries, and we have teams dedicated to each of those sectors. Every year we add another sector or two. And this one specifically in the ABA space, we look for sectors that are growing quicker than that of the typical industry and have sort of a long-term need in the space. So that's why we're in this space.
We're very thankful that you're in this space. we need this in our space. Yeah. So as we start off thinking about those starters, the startups, they're either they've already made the first few steps to starting up, or they're making the plans and they're about to start. What would they, I've tried, there's so many questions there's so many ways we could go and so many questions to ask here, because I'm thinking about shopping for loans. And so in the view from like a startup, if you are wanting to go ahead and hire staff and knowing that the credentialing process could be up to 6 months or more. Yeah. And you're really wanting to go ahead and just kind of go all in, and start hiring that staff, maybe get your clinic space set up or start to get materials or supplies and all of the things. But knowing that you'll need a certain amount of money to bridge you from that point to the point where you actually start getting paid from insurances, right? Is this a gap that you guys can help bridge? What would that look like for startups?
So on a startup, just like y'all talk about on lots of other categories, the idea is to make sure you plan in advance, and part of that plan needs to be the financial implication. So to your point, you have expenses for months before you actually recognize revenue. So making sure that you have access to capital, whether it's your own, whether it's a third party like us, a bank, or whoever it may be, you need to prepare for the worst and hope for the best. Don't prepare for the best and then it becomes the worst. And so I'd say the biggest challenge is those that don't crawl, walk, run, those that don't prepare early and think about these implications and build out a business plan and build out a monthly or even a weekly financial projection. Those are the ones that come to us and they've already started, or they've been, bleeding expenses. They're out of cash or liquidity themselves, and then they're looking for a loan. So they're not coming to us when they're crawling. They're coming to us when they're drowning, right? And it's hard to qualify for a loan when you're looked at or perceived in a scenario where you're higher risk. And so if you prepare on the front end, then you have much better chance at actually delivering capital from a bank that has real bank rates and bank terms that essentially is capital that which you can repay on a long-term basis.
That makes so much sense. And as much as we do talk about having a plan and doing stuff up front, like that didn't even cross my mind that you could have a better chance of being able to get that loan ahead of time versus when you're already so deep.
Yeah.
In the hole. Yeah. I didn't even think about that.
And I would probably say, if you have the ability, a bank is going to look at your resume and experience to understand if and how and why you'll be successful in whatever venture you're going into. And, the clinical side is likely and largely there from anyone and everyone that generally tries to start, the vast majority could try to start an ABA business. But the business part tends to be the part that they maybe need more support with. And I know 3 Pi Squared has lots of resources, but the key is to have a business plan and prepare early on. We often are reached out to and people ask, what do you need? And we can send a list of anything and everything to help them build and think about what's needed. So one of the things that makes it easier to qualify for a loan in the startup phase is if you have some other income stream, right? So for example, does this business need to pay your mortgage? Does it need to pay your rent, your car payment, your student debt, your credit card payments? Or do you have another income stream? Now we want you to go all in on this, but maybe you have another business, maybe you have a spouse, maybe some other income stream that has a recurring income component to it, that essentially lets this business have a little bit more flexibility, because realistically in a startup phase, you don't get paid as the business owner for a while, right? It takes a while. You're sort of the last one to get paid. And so when we underwrite it, even on a projection-based analysis, we need to make sure that, well, you still have your personal obligations. And so how can we offset those to some extent? If you have other means, that's helpful.
Yeah. We have a lot of BCBAs that come to us and they're still working their current job and they're doing maybe a slower startup. They're getting all of their, all of their items, lined up.
Yeah, I mean,
to get ready
especially at the start when credentialing again can take 9 months. It's not like, okay, I'm going to quit my job and now I'm going to start credentialing. It doesn't really make unless you're independently wealthy, and then you're probably not looking for a loan at that point.
So like, is that something that's helpful?
That is helpful. Yes. Being strategic and smart, because you don't need to spend 50 hours when you're sort of just in a waiting game, right? So yes, being smart and dialing down the hours that you need to work outside of the business while not losing focus on the success and early stages of the business is important. Another thing that's helpful, this doesn't apply to anyone or everyone, but if you are doing this and you have a spouse that does something else that can take some pressure off the household, that can be helpful instead of both of you going in full time. Obviously, that assumes you have a spouse, but
like we did,
right, yeah,
we started ours, like this was back, years and years ago. But when we started ours, Stephen had decided to quit his job. Like we kind of played around with it and we had a couple of clients and, but it was before insurance mandates came across. Right. And then so when insurance mandates,
we planned a little bit, right? We did have a nest egg and we blew through the whole thing, right?
Yeah, we did. We thought we had enough for like a year before he put in his notice to like quit what he called his real job. And but that money did not go as far as we thought it would.
We hired 2 BCBAs and a bunch of techs, and man, payroll adds up real quick, right?
Right. Yeah. Well, and then he put in his notice, he quit his job. And then like a week later, we found out we were expecting a baby on the way. And, it was just that whole like, whoa, here we are. Yeah. Right now, we were able to use a few strategies along the way to not need to get out a loan. But honestly, looking back at it, if that would have been part of our plan, I think that could have relieved some of the stress and like sleepless nights, to have a little bit more cushion in there especially when we were starting to when our payroll started to increase. Yeah. Fun times.
One thing that I would mention is it's easier to qualify for a loan when you don't need it.
Right.
Yeah.
And so I go back to prepare for the worst and hope for the best. We'd recommend borrow something. You don't have to spend it. There's no penalty to pay it back quicker, right?
Okay.
So borrow, plan for the worst, but the worst might actually be things blow up and you're growing quicker than you anticipated.
Mm-hmm.
Right.
And in that case, if you're growing faster than your projections and you're delivering the service but not getting paid, or you're credentialing more and more people. So, there can be things that will alter. You have a plan, but everything doesn't always go to plan, right? Whether it's to the good or to the bad. Mm-hmm. And so we just lean towards prepare for the worst and hope for the best.
Yeah, that's really great advice.
Yeah, I mean, if it happens all the time where I'll talk to a BCBA and she's had 3 interviews with her like on the next BCBA that she's going to hire. She's like, I want all 3. And so like, well, I can't afford it, but I want all, right? And so planning for that, it could help where you could grow a little bit faster with having that loan in place. So.
Well, I like the idea of having it just in case. I never, I thank the Lord that Stephen was here because I am not the business minded one in the pair. Like I am the clinician, and he brought the business expertise to it. And I would have like just the thought of, hey, you could get a loan to have if you need it, and then it's there if you need it. That's like blows my mind anyway. So
I guess like what should a BCBA thinking about starting and they're like on the fence, I don't know if I want a loan, but what should they prepare just for best practices of owning a business anyway? And also it'd be like, 2 birds with 1 stone that would help them get access to funds if they needed it.
Yeah. So first of all, going to any bank for a loan for a startup business is tough.
Yeah.
So first and foremost, the way that we offset or the way that we finance these is largely through the Small Business Administration, the SBA. So Live Oak has been the largest SBA lender almost every year over the last decade. And keep in mind, we focus on our specific sectors. And anyway, to me, the business plan and the financial projections are truly where it comes down to. And we don't want you to build it specifically for us. We want you to build it for you to be successful.
Right.
And then we will tell you whether or not, we will make adjustments if and as needed based on what we see in our portfolio and how others ramp up and things of that nature. But all business models are different. In some scenarios, it's payer sources are different. In some scenarios, it's clinic-based care versus in-home.
Right.
So I would just largely say, think about truly what your model will be, what your differentiator will be, what value you bring, and then utilize resources where you maybe have a shortfall. So, 3 Pi Squared has tons of resources across the board to be successful in a startup, but it takes understanding and utilizing and applying it and then having some level of flexibility because everything, things are going to come with punches. Like things are going to happen and you have to pivot and adjust.
Yeah. I think, we just finished a podcast where, we're talking about even thinking about your exit strategy right from the start, because that can help you determine how big do I want this company? Is this going to be my retirement fund? And so then you can kind of plan this out over the long term. So I think that this is just a lot of BCBAs, they're like, I know that this is a good business because like there's so much demand at my current company. The rates are great, so I'm just going to go ahead and do it. And they don't really put much thought into the business plan, market analysis. Is this area saturated? What are the rates even? They're not looking at that. So, knowing that here's another reason why you should do that, probably a good idea.
Yeah. And I would say from our perspective, we do both startup financing. We do acquisition financing. Sometimes people step into this and they buy an existing practice. Some are smaller, some are larger. We also just do expansion financing. Maybe you're an up and running ABA business and you want to go start a de novo or a sort of another location in another market or a nearby market. Yeah, we can give you working capital for that. But it's the same concept, business plan and the projections on that one. And at least in that scenario, you have sort of something to look at if and how and why you were successful in the first one and what that will lead to you or how that will lead into you being successful in the expansion.
That's a great point. As we look at those growers within the business, whether it's opening up another clinic or expanding like multidisciplinary, or maybe you did get a chance to hire multiple clinicians at once, and any type of growth, right? that's also really great. I'm just like, this is just exciting to me because I'm so glad to be able to have this conversation and understand on such a really very even basic level,
Sure.
right? Of how you guys can help and what that looks like. Because for so long in the ABA space, we did not have support people outside of our little bubble, right? We didn't have accountants who understood. We didn't have financing. We didn't have, even like to do our taxes, right? Like there's so many support roles that people are out there to support businesses that we would have to kind of go out. We as business owners, ABA business owners, would have to go out and forge our path and try to make something fit to where there really wasn't anything to fit it.
Kind of teach
the other people, right? And this is why anytime that we meet those who are supporting ABA and understand and get the challenges of ABA, it's just really exciting. So even just the fact of understanding that what the growth even looks like is so exciting to me. Now I know that there's a difference between like a loan and a balance transfer
or a line of credit. Like, can you tell us like what those are and what the differences are for people like me who's like brand new to understanding a lot of the finance stuff?
Sure. So I'll tailor this more towards an SBA loan product, which is the core banking product that any bank would use for a startup business. So a term loan that is geared for working capital means essentially here's $100,000, $500,000, whatever the number is, and you pay it back over a period of time. The idea of having a term loan is for working capital. The reason behind that is you have a fixed level or a permanent level of cash that you need to have for essentially delayed revenue or fixed needs. A line of credit is there for you, which could be used sort of like a balance transfer on a credit card, but that's not the best product for that, and we can touch on that in a minute. But the line of credit is essentially to handle the ebbs and flows in your accounts receivable. So you might have 30 days outstanding right now, but then it might vary to 45 or 60 and then back down to 30 or then to 90. So you have this ebbs and flows of this up and down balance, and it's a lot of valleys and peaks. So from an SBA loan product, a bank is more apt to lend a term loan on a startup phase. There's just the reasons behind it are really driven from SBA to the bank. And so that's what you would plan on really on a startup phase. Here's a lump sum of term working capital. Now, what we would do is essentially say, okay, well, here's 6 to 12 months of interest only payments. Don't start principal and interest out of the gate because you're not collecting revenue yet, right? That's part of where we try to tailor what the terms look like based on the business cash cycle. So, but you'd have 10 years to repay the loan in a term loan. And then those that are growing, maybe you're a couple of years into it, those are a little more established businesses. In that case, you would probably qualify for either a term loan or a line of credit or both. But both of those products, essentially under the SBA platform, are a 10-year term loan. So they're an attractive repayment period compared to, maybe a credit card that you use for a balance transfer, or a lot of people get down that rabbit hole of MCA debt. That can be challenging, which is a merchant credit advance product. And you have to pay it back in 6 months or 9 months or 12 months, and it's 30% interest or 50%. Yeah. Like those things cripple you.
Yes. Mm-hmm. Yeah. Yeah. The pay, buy now, pay later. That can be, I mean, if it's used appropriately, right? And you pay it off as you should, but it's like you said, right? You get things go sideways and, you're expecting payment and it doesn't happen. And then you're like, okay, do I pay my payroll or do I pay my PayPal account? Which one am I going to choose? I know which one you need to choose, and so that can make it very difficult. So that would make sense to, for on a risk standpoint.
Correct. Yeah. And there are times where it does make sense. If you use that as a Band-Aid when you should have had surgery, that may not be
ideal.
Well, that just takes you back to the whole beginning of, okay, like as you're starting up, as you're, like if you go ahead and
plan this out,
then, you have that in a pinch if you need it. Cause you don't know. Cause like we talk about going ahead and, getting a relationship with an attorney and going ahead and, maybe being on retainer. And so that when you have that HR issue in the middle of a Friday afternoon, that you have someone that you can call and, when you need it, and you're not then spending all weekend trying to find an attorney to then deal with this major issue that's going on, because we are all human and we are not in control as much as we like to think that we are. And so things go sideways a lot. So having those plans in place, that's really important.
And is there anything that you would recommend when someone is like, okay, I've got 15 options, right? Like you go on Facebook and if you click on one business loan, then you're going to get 5,000 of them, right? Next. Yeah. So like, is there anything as you're looking around for a partner in getting a loan that you would recommend this partner have?
Yeah. So from my perspective, an SBA loan is really the route to go for a startup loan. And what's important is to work with a bank that understands your space. And the other component of that is a bank that has that is designated a preferred lending partner of SBA. It's all over banks' websites. They like to publish it and talk about it. But essentially it means you, the bank, have been reviewed by SBA. You do enough SBA loans to where we trust you, go make the loans, and then if we need to audit you, we will, and make sure you're doing it correctly. A lot of smaller banks don't do that. They don't do a lot of banks. They don't do a lot of SBA loans. They tend to, they might do 2 or 3 a year, and your process is going to take 3 to 6 months because the banker's trying to adhere to the rules of the road of SBA, and they have no idea.
Okay.
Right. They have to send it off to SBA, and, when the government's shut down for 40 days, it's a long line.
Yeah.
How long does it take? So we don't have to do that. We don't have to go to the government for any kind of analysis. So a preferred lending partner of SBA, one that understands the sector, the space, will help structure your loan to be where it's the right product, the right amount, the right term for you to be successful in the long term.
Let's say starter comes, they have everything needed to apply for this loan. It's accepted. What kind of turnaround time should they expect on that?
Yeah, good question. So it's about a 45-day turn time. So it's not quick. That's why we tell you to prepare for the worst and plan for the best.
Right. There's such a theme here today, is there not?
Backwards on. But anyway, and there are a significant number of dots to cross, or I's to dot, T's to cross with respect to the SBA process. But that's going to be your timeline with us, who has the ability to do it in-house. Not knocking a local bank, but a bank that doesn't do a lot of SBA loans, their timeline is unknown to them, to you, frankly.
Right.
So, the first sign of an existing business that's up and running that doesn't think they need any capital, that's the time you go and try to qualify for something. So even in that scenario, if you don't need anything right then and there and you're an existing business, a line of credit is a perfect option, right? To have that rainy day fund. For a startup business, when you start doing or thinking about credentialing and stuff like that, you should start building your business plan. Even if you're prepaying a little bit of stuff and you're 6 months from revenue or 4 months from revenue, that's a good time to start the process, because how fast you move on your credentialing and things of that nature really will be dictated on how much access you have to capital. And if you have plenty of it yourself, then, put the pedal to the metal. But if you're going to rely on outside sources like a bank, then it's important to make sure you know what that looks like and when that will come along the way. Now, it might take 45 days, but it'll take us a week to pre-approve you. So you'll know it's coming, very soon after an application.
Okay.
That's nice.
Yeah.
That's nice that you don't have to wait 45 days to know if it's
to
coming.
find out if it's
Right.
Yeah.
If you even can do it.
Right. Yeah. Okay. Cool.
So how do you get a business loan without signing personally? Is that even a thing?
So we don't do them, and it is very rare until you hit a certain size and scale.
Okay.
Frankly, to where the business itself is a business in itself and you aren't the business. If you can sort of understand that, right? So can the business survive without you there on a day-to-day basis? That puts less reliance on the owner and the operator and sets it aside to where this thing can run, and not necessarily run just as well without you, but it can be successful without you, because a loan to the business, and the business only, we have to think about, well, what if Steven's not there, right?
Yeah.
Will it be successful?
Yeah.
So it's a pretty atypical product in an earlier stage, younger business.
That makes sense, especially in this field, right? Because there are a lot of ABA startups that the BCBA is the person starting up. The BCBA they are the only BCBA, at least in the beginning. And without a BCBA, you can't bill insurance. You can't do anything. Yeah. And so, if something we had did a podcast a few weeks ago about emergencies, right? Like, what's your emergency plan? If you have a family emergency, if you are the family emergency, if you're the sole BCBA, the only BCBA in your company. So that would absolutely fall into the box of like not being able to run successful without you. Right. If you are the only BCBA.
And this brought up a curious question. Okay. I don't know, how do you handle, so we call them no-nos, I think is what they're called, but non-clinician run businesses. So you have someone that wants to open up an ABA company, but they're not a BCBA themselves. Is that handled differently than, say, a BCBA comes to you with a plan? So we have done those when there's an acquisition of an existing ABA business and there's numerous BCBAs that are on staff. So where it's not the whole relationship with the family and connection there clinically is not really just with one person. Okay. From a startup, we haven't done one where it's just been, John from whatever background coming to do it. Ideally, it's where you have someone with a business background and you have someone with the clinician background, and that's the perfect match, right? You've got someone with these strengths and someone with those strengths. Your likelihood of success is tremendously better in those scenarios. The most recent one we've done, they're actually getting ready to close in Colorado, but it's exactly that. The husband's got a business background. She's a BCBA. They don't even have to relocate. They're buying an existing business that's nearby. It's okay. It's seamless for them. Okay.
Yeah. Yeah. That's really cool. Well, even just the fact of all the hats that you have to wear, right? Because that's what we talk about even with a BCBA. If people come to us and they just want to be the only BCBA and hire a few techs underneath them and not grow, most likely they come back to us within a few months because they have grown. Yeah. but there's a certain set of skill set needed for clinician and a certain skill set needed for the business. And, one might say as you grow, you just don't even have the capacity to handle both at the same time without one or the other, kind of losing sight of one or the other.
Right. And then just one question on that, how did that go as far as the BCBA and the business owner, spouse, I'm assuming, they bought an existing company. Do you all help with the due diligence, or is that something that you're like, okay, this is what we need to make? Because outside looking in, maybe, okay, they've got a bunch of clients but they could be losing money on every hour that they're providing services. So how does that look as far as logistically?
So we try to, that's part of the difference on what we're going to ask for on a sector by sector basis. So normally a bank would say, hey, give me your tax returns, your business tax returns, and your profit and loss statement for the year. Well, we're also going to ask for your payer source breakout, your price per hour. We're going to ask for what your strategy is for your PCBAs. Like, do you guarantee 40 hours, or do you have hours that people like that are after hours for, after school hours and things like that? So we try to understand that business model that, frankly, most banks aren't going to go that deep because it's the shoe store, the grocery store, the gas station.
Right. Okay. Yeah, that's good to know.
That is really good. That price per hour, that's important.
Yeah.
We also like to know, for example, when was the last rate adjustment? When did you attempt the last rate adjustment, right? Were you successful? Were you not? It gives us a sense of, because it may not happen every year, but it'll happen periodically.
Yep. And I hate to say I told you so, but anybody listening, you need to rate negotiate. And this, again, is another reason why. Like, there's so often I'm talking to someone, they didn't even, they were like me, right? I was 4 years in. We were 4 years in. I didn't even know rate negotiation was a thing. And so, they've had the same rate for the last 10 years. How do you survive that way? Because I can guarantee wages did not stay flat for the last 10 years. This just validates.
I saw the twinkle in your eye when he said that, and you were like,
it's really important. And again, I'm glad that that's something that you all look at. It is really important. Yeah.
Right. Well, so as you're growing and building and you decide that you want to open a clinic, I know a lot of owners are looking at, do I want to rent a space or do I want to purchase a space? What advice do you have as far as what it might look like to be able to purchase a space?
So I would largely say, keep in mind that we will do both real estate and non-real estate. But remember, at the core of what your business is, it's about providing care to kiddos, right? So if you're going to spend money and have a bigger payment on real estate because you want to have that asset for some reason, I understand that conceptually. But what you don't want to do is take cash out of the business and dwindle away your ability to operate and grow your core business, which in fact is the ABA company, not your real estate property you own. If you're in a position where you have sufficient or excess cash and maybe you do want to buy one, then I understand that makes sense. Now, one of the real benefits under the SBA platform is once you've been an existing owner for, at least as the rules today, for at least a year, and your financials look good for a year, so you might need to be in business a little longer, right? But once you've had that, you can expand to in any capacity with nothing down, right? So imagine 100% financing on a clinic location, whether you're buying the real estate or leasing it.
Okay.
So that, once you've proven success in early days, the bank is willing to do higher leverage or frankly cover all of your debt obligations on a go forward, provided you can afford them.
So what would proving success look like?
It's largely based on cash flow analysis, right? So are you making enough? Are you bringing enough in order to handle your current debt service? And then if you're going to open a clinic, same concept. What's the business plan look like? And how do you get from 0 people to 20 or whatever your capacity is going to be? So we'd look at the business plan to see, can you afford the debt service or the payment if we were to give you the full, 100% loan on that expansion need?
I didn't really think about, especially for starters, right? I thought it was like, dream on, right? Like, you're not going to get any capital. It's just not going to happen, right? Because even I've looked at when we started, it was like, okay, they wouldn't even look at us until we were in business for a year, right? And most people. So knowing,
this was also,
yes, this is years ago,
and years ago.
So knowing that this is an option, and it might even be a better option to say, while I'm still working, while my finances look pretty good, now is the time to apply and get that. And like you said, you can pay it off early, right?
I mean, to me, it sounds like, okay, this is a no-brainer to add to our startup list.
Yeah.
This is just part of what you do as you're starting.
At least consider it.
At least start the process. At least see if it's something that because I understand also it's not 100% guarantee that everyone that signs up is going to get it.
Sure.
I know that there's decisions you have to make around it. And, what interest and all of the things, right? If it makes sense for you at the end of the day, but at least starting the process to see if it's available to you and if it's something that makes sense for where you are in your journey.
Yeah.
So do you think it's something we should automatically just put in the list?
I think so. Yeah.
Yeah. I'm learning so much.
What I reiterated earlier is, prepare early on, whether it's phase one in your startup, whether it's expansion down the road. And the last thing I'll just recap on is prove success early on, and then your access to capital for growth going forward is almost endless.
Yeah, that's really good advice. Well, we truly thank you so much for your time and for coming on and talking to this. Hopefully what will be a first of many conversations as we are all learning about this and learning about what you guys at Live Oak can do to help ABA business leaders, because it's really exciting that you guys do help ABA business leaders. Yeah. And so you guys who are listening, we will have all the information about Live Oak Bank in our show notes. And then you can also go to our 3piesquared.com webpage and go to the affiliates page. Am I correct in that? Yes. And find
and
more
there's a link there. Yeah. And I'm just going to put you on the spot, but let's say I got $150,000 loan starting up, and I said, okay, I'm going to take this option where I'm only paying interest for the first 6 months or 9 months while I'm waiting for credentialing to come through, and I actually get clients. What kind of payment am I looking at? Just a rough.
Yeah, ballpark is probably about $1,000 a month.
Okay,
on $100,000.
Okay, all right.
That you borrow. So
that seems doable.
Yeah. Yeah. Okay.
Most people will set aside. They'll just personally have $10,000 or $12,000 sitting aside, ready to make that payment, since the business itself isn't going to be able to do that out of the gate.
Yeah. No, that's okay. That may and then at the end of it, if you don't need it, great job, right?
Yeah. Right. Yeah. Totally. Yeah.
Okay.
That's great.
Yeah. Okay.
Oh, I'm excited. So. All right. Well, those of you who are listening, if you didn't already know, we have a podcast hotline.
Yes, that's right.
Yeah. Cue to pull up the number. So our number is 1-737-330-1448 and select option 1. And we'd love to hear from you. Any questions that you have after listening to what Shep had to share with us today, we would love to hear what questions you have, because you know what, even if you feel like it's a silly question, if you have that question, chances are hundreds of other people have that same question. Yep. I know I will, as I'm still learning about all the finance end of things in business, right? And then if you have any story to share, along your journey about your finances, about what you did and worked really well for you, or about what you did and you learned from your mistakes, right? We would love to hear those stories as well. And we'll share them along with Live Oak Bank as well. If there are any specific questions and we can share them with Live Oak. And then you might even hear yourself on the podcast if you would like to at a future time when we do answer some of those questions live. So
I came out of this podcast thinking balance. Well, when I started this, balance transfers were a great idea, and after, I don't think it's worth the risk.
I also feel like I've had a major shift in how. Yeah, I've got a lot of things to really think about and process through, because I do have a shift in how I thought about it. Because I'm going to be honest, I grew up Southern Baptist in the South Carolina with my daddy did the finances, and I've had other women in business who have shared the similar conversation where they are they're learning themselves about business and like the finance piece and the money part, because maybe they weren't the one in their family who took care of that. But also the fact of like this mindset of, if you get a loan, it's bad.
Right.
You know, it's like there's this emotional piece behind it. Like even us, we'll say, oh, we started our company debt free. And we like, yeah, but at what cost? Like to our sanity.
I mean, I lost my the color on my hair.
He went pretty gray within that first year of our business for sure. Either that or our son being born. I'm not quite sure. Maybe the
it might have been a combination.
But yeah, so I guess I might just on a personal note, you know, I'm like kind of shifting my thinking after this conversation of like, you know, getting a loan doesn't mean you're doing a bad job or it's like a bad thing, right? Yeah. So, anyway, so any of you out there listening who may have had like similar shifts in the way they're thinking about this after this podcast, or just have general questions about how all the process works and who to reach out to, we would love to hear from you on the podcast hotline, but then also go to the show notes and check out how to get in touch with Live Oak and Shep and all of his teammates there. And I guess that's what we have for today.
That's it.
Anything else from you, Stephen?
No, that's it. Thank you very much for coming on, Shep. I really appreciate it.
Thanks for having me.
We do. We thank you for your time. I really appreciate it. All right, everyone. We'll see you next time.
See ya.
Thanks for joining us on ABA Business Leaders.
We provide mentorship, courses, handbooks, billing support, credentialing, HIPAA support, web design, and more. Everything you need to build an ethical and sustainable ABA practice.
You can find all of our resources at 3pisquared.com.
Don't forget to subscribe and share this podcast with other ABA business owners.
We'll see you next time. And remember, you don't have to build your practice alone.